If you're looking to improve your trading skills, you don't want to miss this video. I'll be sharing one of the basic techniques how to spot the trend reversal, so stay with me until the end. I'm feeling it, feel the passion, Hello guys and welcome to another video on my channel. My name is Rado and today I'm going to talk about the market cycle model and I'll show you a technique how you can spot the reversal in the trend. So stay with me until the end and let's get into it. Okay, so first things first, how can we define trend? Well, this is the time measurement of the direction of the price covering different time spans. We have three main trends that we use: primary trend, intermediate trend, and short-term trend. So the primary trend typically lasts from 9 months up to 2 years and it shows the attitude of investors towards the unfolding fundamentals within a business cycle. One cycle consists of one primary bull and one primary bear trend. Generally, the bull trend lasts longer than the bear one. Here you can see an illustration of primary trend. Of course, this is an ideal situation. In reality, the bull and the bear part are different in terms of their magnitude. But of course, anyone who has seen a price chart knows that the price isn't just moving into a straight line. And the primary trend is interrupted by several reactions within it. These counter-cyclical trends, we call them intermediate trend. It can last from 6 weeks up to 9 months, and it's important not only to know the direction of the primary trend, but to analyze the intermediate trend as well, because this can improve your success rate in trading tremendously. And lastly, there is the short-term trend. These are interruptions within the intermediate trend that last from 2 weeks up to 4 weeks. They can be longer, they can be shorter, of course, and generally they're influenced by random news, so this makes it a lot harder to identify. Okay, so now that we know the three different trends that are happening at the same time, we can say that the price level is influenced by several different trends simultaneously. And let's say we spot a reversal in the short-term trend, we can expect a lot lesser move than if we spot a reversal in the long-term primary trend. And depending on your trading objectives, you can focus either on the primary trend, let's say if you're a long-term investor. However, it's important to keep an eye on the short-term and the intermediate trend, because if we spot any reversals within the intermediate trend, this can signal that reversal within the primary trend can happen soon as well. So what is technical analysis and why do we do it? Well, this is the art of identifying a reversal in the trend at an early stage and then ride that trend up until we have enough evidence to say that the trend has reversed once again. And this process consists of combining different scientifically derived indicators where we use statistical and mathematical operations and try to see an overall picture of what's happening currently in the market and see if we can spot reversals in these trends, so if we can catch the tops and catch the bottoms. One simple yet effective technique that we can use to identify interruptions within the trend is called Peak-and-Trough Progression. It's based on Charles Darrow observations that a trending market moves into waves, and each wave being higher and higher than the previous one. And spotting and catching those waves can help us with identifying the trend. And let's say if we move and have higher high and higher high, and then this chain is broken and then we do a lower high, we can maybe expect a reversal within the trend. So let me show you an example here. We have an upward trend and each rally is higher and bigger than the previous one. We do a higher high followed by higher low, another higher high followed by another higher low, and then we have another higher high. However, next high is lower than the previous one, so something is happening here. And when we do a lower high and then we break the level of the previous low, we can say that we have seen a reversal within the bull trend. This is also true for the bear trend. Let's say that we have a downward trend, which means we have lower highs followed by lower lows, and at one point these reverse and we see a higher high and a higher low breaking the previous levels. At that point we can say that the trend has reversed. Of course, there is the reversal dilemma, as we call it, that at one point we can maybe break the previous low as seen in point X here. However, it's still not confirmed that the trend is reversed, because we want not only to see a lower low, but we want to see a lower high. And when we do a lower high and we break the newly established lower low, here, as we can see in point Y, we can see and we can say with some kind of certainty that the reversal is intact. Okay, so how do we say that Peak-and-Trough is legitimate? Well, let's say that we have an initial move to establish new higher high, and let's say that this is 100% of the move. We are looking for a retracement from 1/3 up to 2/3 of the previous move. So let's say we create a new higher high. We want the retracement to be, let's say, a half of the move before going and doing another higher height. That way we can say that, okay, this is a legitimate peak and a legitimate trough. Otherwise, it can be just a different type of a move. Okay, so let me share one example with you where we can see a reversal in the primary trend. So don't mind my drawing skills. Let's say we have big primary trend starting from April 2020. We can see that the intermediate trend, how it's moving, it goes and makes new higher high, then it creates a low, then the next wave pushes above the previous high, and then we create a higher low, and then this keeps on going and going until here we can spot that the price is kind of losing momentum. It did peaked, okay, but we cannot say at this time whether this is the peak or not. We are looking for the movement, and what we can see is that the price broke the previous low and did a lower low, but still not very clear. That's why we wait, and then we see a lower high and then breaking of the previous low. So we go with a lower high and a lower low, and at this point we can say that, okay, the primary trend has reversed, and we're expecting a big change in the price towards the downside. So we entered in a primary bear trend. And yeah, that's all for me for this one. If you have any topics that you might want me to cover, do share in the comments below. Also, if you like this video, make sure you hit the subscribe button, like it, and hit the bell button, as I'll be putting more videos in the sphere of trading and finance. So thank you, and I'll see you guys in the next one.